Hello students, myself Dinobandhu Shaha. Today we will discuss some basic concepts of income tax, and this subject known as taxation 1 is in the syllabus of BCom second year 4th semester. What is tax? Tax is that payment by the people of a country to the government for which the people of the country cannot demand any direct benefit from the government. On the other hand, we can say it is one of the important sources of revenue of the government of any country. Government imposes various types of tax. Those types of tax can be classified into two groups. One is direct tax, another one is indirect tax. Direct tax, that is, we can say there are two terms, tax impact and tax incidence. Rather, we can say tax incidence and tax impact. When these two terms fall on a same person, the tax is known as direct tax. The best example of the direct tax is income tax. In this case, the government imposes the tax on a particular person and the person has to pay the tax. Here, the shifting of the tax to another person is not available. On the other hand, indirect tax is that tax when tax incidence and tax impact fall on to different persons. So, the best example is that in this case, the government imposes the indirect amount of tax on the manufacturer. Manufacturer collects that amount of tax from the wholesaler. Wholesaler collects that amount of tax from the retailer, and ultimately the retailer collects that amount of tax from the final consumer of the goods. So here there is an advantage of shifting the tax from one person to another person, and ultimately the indirect tax is borne by the final consumer of the goods. Here we will discuss the main concept, that is the income tax, which is direct tax. Other example of the direct tax are wealth tax and gift tax, though this type of taxes are abolished by the government from our country. And in BCom 4th semester syllabus only there is income tax. So before coming to the income tax, that is, we have to know the meaning of income. We can say that there are so many incomes, that is, there are so many incomes. It is very it is very difficult, to define the income. That is, we can say there are so many terms which are used for income. Number 1, profits and gains. Number 2, dividend. Number 3, the value of any perquisite, that is the salary we received in monetary terms. It is not that the salary is only received in the monetary terms. Sometimes we get some benefits from our employer. Those are not in the monetary value, but those are considered as our income, that is salary. Any capital gains, the profits or gains of business of banking carried on by any cooperative society, any sum mention, any amount received under the Keyman insurance policy. uh, so we can profits and gains of business and profession, interest from bank, post office or other financial institution, dividend from companies, that is dividend from Indian companies and foreign companies, though dividend from Indian companies are tax exempted, but dividend from foreign companies are taxable. Any amount which is received by any teacher for examining the answer scripts is income. uh, any income which is in the nature of the casual, that is income from lottery, income from crossword puzzles, income from horse races, camel races, are known as income, though these are the income taxable under the head other sources. The aforesaid definition, that is, doesn't define the income. merely describes the various receipts as income. It therefore follows that in addition to the aforesaid receipts, other receipts may be also be taxable under this act if it comes within the general and natural meaning of the income. Uh, ca- what are the features of income? Features, that is cash and kind. Income can be received in cash or income can be received in kind. What is income received in cash? We know, understand. Suppose I am getting some amount of salary from my office in terms of cash, that is my cash income. And income can be in kind. Suppose I am a daily laborer in a particular place. I am working, and at the end of the day I am given 5 kgs of rice, and the market price of rice is rupees 50. So my earning for that day is rupees 250, and it is chargeable to tax. Contingent income. Income should not be contingent. That is, income cannot be anticipated. Income should be actual. Uh, Notional income. That is, notional income means a person cannot earn income from himself. That is, a business organization has two departments, and one of the departments has transferred goods to another department at selling price, that is with profit. So that profit cannot be considered as income of the business organization as a whole. Sources of income. Sources of income can be permanent or temporary in nature. Suppose I am doing a service in a particular organization. This is my permanent source of income. On the other hand, I am giving a particular shop in Durga Puja or in book fair, in which I have earned some amount of income, so that can be a temporary source of income. Loss includes a negative income. Loss includes a negative income. Loss includes a negative income. Another features of the income is pin money. This is one of the interesting features of the income. Generally in our society, father gives the money to our mother to run the family for a particular month, or uh, our mother always try to save something out of the money given by our father. So the amount which she saves after running the family for 1 month is known as pin money. Suppose she has saved rupees 1000 out of the money which is given by father, rupees 20,000. So now here 1000 is the pin money. Pin money is not chargeable to income tax. But when the pin money, that is this amount of pin money, is deposited in the bank, and the my mother has earned some amount of interest on that pin money, that interest on pin money is chargeable to tax. So we have to keep in mind, pin money is not an income chargeable to tax, but interest on pin money is chargeable to tax. Okay. Next feature is donation. Receipt on account of dharmoda or donation is not taxable in the hands of the recipient. Donation is not treated as income in the hands of the recipient. Next, gift. Where any sum of money exceeding rupees 50,000 is received without consideration by the assessee, the whole of the such income will be taxable under the head income from other sources. Um, Disputed income. Disputed income, in case of any income which is in the nature of dispute, in this case the income tax department will consider that who is receiving the income or who is the recipient of the income, that is the person is chargeable, the person is chargeable to tax. Next is income is net of expenditure. Always the income is to be net of expenditure. Suppose I am a fruit seller. Uh, and I have sold in a particular day, the total amount of sale is rupees 1000, and this is not my income because I have purchased the fruit at rupees 400. So 1000 minus 400 is my gross income, that is rupees 600, and my other expenses for bringing the fruits from the wholesale market to the retail market, rupees 100. So 600 minus 100, that is 500, is my actual income. So whatever expenses you incur to earn the particular income, that expenses are to be deducted from the sale price, that is your income. But there are some exceptions. Lump sum receipt, income can be received in lump sum or income can be received in installment. In whatever mode you receive, that is always taxable. Reimbursement, reimbursement is not an income. Reimbursement is not an income. I am saying a particular simple example. Suppose I am doing a job in Kolkata and my office has sent me to Mumbai for a particular official job. And my boss has said me to stay in a particular hotel and to take food, and whatever expenses I incur in Mumbai, the total amount, that is with the requisite amount of vouchers and bills, I will submit in Kolkata office, and Kolkata office will reimburse the whole amount. So this is not my income. So this is the reimbursement of the expenses which I have done in Mumbai. So this amount is not chargeable to tax. Double taxation, it is very very important. In income tax, double taxation is not done. That is, government cannot impose taxation twice on a particular income. Legality of income, income tax department doesn't consider which income is legal and which income is illegal. Whatever may be the nature of the income, you have to pay the income tax. Subsidy, subsidy is not the income. Subsidy is not the income. The government pays the subsidy on different products. So when I am receiving or you are receiving that subsidy from the government, that subsidy is not your income. So these are the main features of the income tax. Next class we will discuss the concepts of assessment year and previous year.